Friday study for you. We got FANG, the FANG stocks, but we added Microsoft. So what I did is I looked back, 10-year look back of the 30-day performance going forward. Is that how I should say that? Amazing people or something like that. They just do amazing things, which is essentially the reverse of fail army. Like you flip a cup and it actually lands versus bonking you in the head.
Probably seen me on there a few times.
No.
So we're gonna go with good news. We want to start with good. Oh, you gotta. Go ahead.
You want me to introduce you? Yeah. Well, I'm Dustin Tibbetts, financial advisor with Jazz Wealth, and next to me is Cody. Gonna hear a Disney tip.
I thought it was
Tibbetts.
3%.
2%.
I thought it was 3.
2%.
Oh,
changing the rules.
I have a Disney story just because.
I'll tell you what. Yeah, let's do a Disney story. I won't do a secret thing, although I've got a lot of good ones in there. Hey man, get out of my way.
Well, it's just a little one, and I really just had a question for you. I guess are you going to Shanghai anytime soon?
I would love to. Yeah.
But you're not? I assumed you were because it's sold out. And I was like, well, if Shanghai Disneyland tickets sell out for opening day. So I was like, man, Dustin's got to be going. He must be taking a couple days off, or at least a day. I don't fly there, fly back.
Risk the virus?
Yeah.
You risk the virus.
Yeah. Well,
I will go to all the Disneys around the world at some point.
They got to be fine over there by now. Right? I don't know how that works, but you're going to go to all of them in the world? How many are there? What do you got?
Well, Paris, Shanghai, Tokyo.
You done the California one?
Never done California. And then, of course, Florida.
Wow.
Yeah.
Oh, okay. Well, that's not.
They need a Disney Canada, eh?
Wow.
I think that'd be a good one.
No, that's why they come here.
So what do you got?
That's it. The Shanghai Disneyland is it's sold out. They announced that they're going to open up, and they sold out. Actually, do I have the date? Do you have the date? Probably know it right off the top of your head, don't you?
Let me show you how we do it. I'll take the news story. Let me
Listen, I took a picture. I was like, he's not up 3%. I'll just take a picture of it. I got better stories than that.
Disney Shanghai sold out in 11 minutes.
Wow.
Which is something, right? 11 minutes. Ticket prices.
Cheaper.
For Disney Shanghai. If you convert them to dollars, of course. $56 for a normal visit, $71 for a weekday. It's well over $100.
Wait, say it again?
$56 for a normal visit, like a weekday visit, non-busy time visit. Yeah. $71 if it's the weekend or it's more of a peak season. What'd I say?
Weekday.
Well, anyway, so notice the level of detail.
Well, I just didn't care enough. I was like, hey, cool, they're opening.
Yeah, that's true. You don't care.
That's good enough that's good for the world, and I'm glad we're kind of getting back to opening things up. I just didn't care about when, and kind of cool that it sold out quickly.
Disney Springs over there.
Yeah.
Opening up May 20th, phasing in the opening up again. They're going to get a feel for it with the place that doesn't really matter, and then they're going to test it out on the parks. So we're working our way.
How do they? We don't need to get into a long conversation. I just don't know how you social distance there. It's basically stores and restaurants and bars and
less people.
How are they gonna? Yeah, I guess less people, right?
Less people. Well, you got to let people come in and they realize they're social distancing, and then after a while, when the news fades away, they'll just start congregating. Like this is going to be a natural evolution.
Yeah.
Same thing.
Has to be.
Yeah.
Anyway, good for your Disney.
You throw this all out the window if you just start talking about the election. Everybody would just go back to work.
Outside the election.
They'd be fighting with each other again, and we got to deal with that, but so be it.
Well, we're already getting there. We're kind of ramping up into it, right?
Yeah.
I mean, masks are all of a sudden political, so we're just getting right into election season. It's going to be a little bit longer this year.
It's going to be rough.
Yeah.
What you got?
Oh, you want me to go again?
Oh, I'll go again. Wendy's thinks they're onto something. Wendy's has a hunch.
Yeah?
Yeah. Wendy's, the fast food giant, they've got a feeling that their meat producers, people sell that meat to them, are raising their prices on them. Artificially, claiming that there's a meat shortage out there. They got a hunch. So Wendy's is now doing their own investigation into meat suppliers all over the United States, raising their prices because the media says there's going to be a shortage of meat. They got a hunch. Yeah. That's bad news because Trump and Nelson Peltz, who's the CEO of Wendy's, they're good buddies.
Yeah.
So Trump said the other day, I'm gonna call him and make sure they're doing. I want him to look into this.
Yeah.
So they're looking into it.
Wow.
Little Ukrainian thing right there, right?
Yeah, there's something interesting.
I need you to look into this for me. Meat prices higher, and the guy from Wendy's is like, I have a feeling they are. So he's out there sleuthing.
Good for him.
You know what I
mean, hey,
If
Why
that's
not?
the
Like,
case, take them down.
Right, and that
Yeah.
I mean that's his business. That's everything into his business. They're already having a shortage, but last week they ran out like 70% of their stores just didn't have any meat.
Yep,
It was
they've
like,
been putting signs up, and then so it was funny because the CEO was like, "We have a hunch." The way they worded it.
yeah.
Okay.
Someone gave him that hunch, but
Trump's a known burger fan, loves burgers.
but he loves McDonald's. He doesn't really care about Wendy's.
But they're buddies. I don't know if the Nelson Peltz, the CEO of Wendy's, billionaire.
Well, the dollar menu at Wendy's isn't
True
the same
billionaire.
as it is at McDonald's. So
No, it's a different thing. Anyways, go for it.
we talked about Uber the other day. Your favorite Uber, by the way. You take a little bit of heat for your stance on Uber. People do love their Uber. Those are
Nothing wrong with the company if you want to use them, but why put money?
Well,
in-
yeah.
yeah, I get it.
the
Talk to me when it falls.
well, so they on Wednesday it was announced technically, I guess, that they had laid off 3,700 workers. We already talked about that weeks ago. That was old news for us.
Yeah, we nailed it.
Literally the next day, Uber spent $170 million in investing into scooters,
Yeah,
which I didn't see this. So this was all new to me. Now, are you familiar with their scooter thing?
they've touched on it. They did something with Ford a while back to try to touch on it. Ford was going to have their own scooter.
Right.
I'm like, where's the world going to? We're not going to ride around on.
Well, Uber already has the scooters. They actually
Well,
have
now,
them.
do you mean stand-up, hang-on scooters or bike scooters? Yeah, those scooters.
So it's the company Lime scooters. I guess Uber already has a branch of this because we did them down in Bayshore. They have them around there, and you just open up your app, scan the thing, you're on it, and you go.
Yeah, it
So
took too long. I didn't do it. It took too long.
what do you mean?
We
it
went to Charleston or something. I'm
took,
like,
you have to download the app?
you got to download the app.
You already
and
have the app.
go like this.
You can go like this.
Hold it for a signal.
Oh, well, that's on your.
By then, I
that's on
could
your-
have walked.
That's on your provider. That's not on Uber. And so it's interesting, right? And so they spent $170 million, or they're trying to spend $170 million on this company Lime, which has a valuation of $510 million, which is a 79% discount from a year ago. So technically, if for a company that spends more than they make, right, you're trying to get something at a discount. This is something they wanted to do for a while. They like the scooters, they like the bikes.
Here's the problem. And maybe this
No
is
problem.
maybe this is not interesting, but you're losing billions in a quarter. Is a quick ride on a scooter gonna solve that problem?
I think they're just trying to go different ways, and I think that's why people like Uber.
I get the impression they're just like, holy crap, just try anything. All over the world, and it's not working. Well, I mean, it's working, but it's not working to a profit.
But in a sense, isn't that what Amazon did? Was let's just try everything, and then eventually something's going to stick. Apple, they all do the same thing.
No, they said we sell stuff. And we want to sell stuff faster to people that will rely on us. So we're going to build warehouses closer and closer together so that we can figure out if people order something, we can get it to them right away.
Right.
They never
And
said,
the TV,
like-
and the music.
Well, that came afterwards, though. That came after they were already a profitable company. The one thing I think they started was AWS before they should have. So that one, we could argue that that was probably a mistake. But now they wouldn't say that because that's a big portion of their business.
And Amazon early on wasn't. They didn't really focus on buying and selling goods, right? I mean, they were focused more on books, right? Or no?
That was initially. That was how way back in the day, Bezos kind of thing. But they had a 0.01% profit margin. You ever look at Uber's profit margin?
Well, yeah, we talked about it yesterday. I think they're trying to throw everything against the wall. I agree with that. They are throwing everything against the wall, and I think it's only a matter of time before, hey, maybe something sticks. I'm not saying I'm putting any money into their stock, which is
Stock's up 6% today.
It's
Yeah.
up 6% today. So
Yeah, you can't complain there. I mean, if you're a shareholder, it's just like, oh my God, negative 60% profit margin.
I get it. I see why you don't like them. I'm just throwing it
It's
out
not that
there.
I don't like them. I'm just like,
No,
I
you
don't
hate
get
'em.
it.
You hate
I don't
Uber.
get. They're worth $57 billion. At some point, they're worth that much. I may talk about it later.
Yeah. All right, go ahead.
I don't want to get fired up. It's Fun Friday. Bank of America is positive on Home Depot and Lowe's. Actually, Bank of America said Home Improvement has proven to be the most resilient category of the hardline retail throughout the spread of this virus. Prior to the crisis, 19% of its stores surveyed by the bank said that DIY shoppers were their biggest customer. That makes a lot of sense. But since then, it's risen to 35%. So the note said that paint and lawn and garden categories show the biggest strength. So they are positive on Home Depot and Lowe's, which didn't have to shut down during the virus.
Nope.
Make it a little harder to get in there. If you were to look at the performance of Home Depot and Lowe's, the way it goes is Home Depot always outperforms Lowe's.
Yeah.
Probably the same with their stores as well, obviously with their stores. So we'll show the 10-year performance of this one. You can see the outperformance about 4 to 5% a year on an annualized basis. that Home Depot outperforms. Both of them outperform the S&P 500 over the long term. Yeah.
Who has more stores by? Or does Home Depot have considerable?
I believe they have considerably
way
more
more?
stores. Yeah. Lowe's actually closed a bunch of their stores. They were scaling back. They did this last year, so it's not like this is something because of the virus. They just decided to scale back their stores, try to be more efficient with their stores, and make those stores profitable. And I don't know where they're at in that process, but I don't know. 200,000 employees.
Dang, good number.
Yeah.
So they're still massive, obviously. My last one.
Okay.
My last one on Fun Friday. My last one. Cord cutting.
I'm a cord cutter.
You're a cord cutter, right? And when did you cord cut?
2 weeks ago.
2 weeks ago.
Yeah. And I'm not going back. Don't miss a single thing.
For the last, I feel like for the last 5 years, we've heard, I'm cutting the cord. Everyone's cutting the cord. Everyone's cutting the cord.
Dun, 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 dun,
And within the first 3 months of this year, it finally exploded.
Ooh. Well, yeah.
Tons of people cut the cord, and obviously for, other reasons, trying to save some money in this weird time. But AT&T lost 1 million TV subscribers in the first quarter of this year. 1 million, which is way more than anybody else. DirecTV and Dish also lost almost 500,000.
They'll be fine.
Well, yeah, and so AT&T now and all this Sling TV, they all lost as well. But Hulu picked up 100,000 new subscribers.
Yeah.
And they're at 3.2 million. And then YouTube TV, which pretty good. I don't know if you know about YouTube TV.
Never.
Yeah, it's got everything. I mean, they got.
Where do
ESPN.
you find this?
YouTube. It's on YouTube.
Where do you find this?
It's on YouTube. That's the one I've had many people say, hey, that's the way to go. I know Sling's good and all, but
Really?
YouTube TV, because apparently they have everything, and they're really good at what they do.
We'll check.
They added 300,000 new customers in that same amount of time. So they are on the rise. And just a little fun fact for you, Disney, they notched 54.5 million subscribers worldwide as of May 4th. Less than 6 months after their initial launch. So,
starting to slow a little bit with their subscriber count on Disney Plus, but still a whole bunch of people.
Get a lot.
I've been using the Sling Happy Hour.
Yeah.
It's free. I might sign up for that.
Yeah.
We went from paying $256 a month for cable, the box, and all that stuff, to $55 now with just the internet FiOS. We got the fiber optic stuff, and what we said was like, oh hey, we'll take that savings and we'll go out to a really nice dinner once a month, $200, but with a nice tip and everything. We'll support local restaurants. It'll be great. And our favorite restaurant is not reopening.
No, really?
It is not. They named a drink after us, Jazz.
They're not reopening for good?
They're not reopening.
Whoa,
Nope.
I didn't know that.
They're not going to reopen. They could not come to a deal with their landlord. They had to renew their lease anyways, and they said it's just not worth it.
Wow.
Yep.
So you're gonna put like a copyright on your drink, or patent, trademark? I don't know which one it is, but take your drink.
I don't know. I forgot to tell you that, but now I'm sad. Now I'm sad, man.
Well, I think, but the TV subscriber thing, people cut the cord, right? And so now you gotta pay for internet, $60 a month. By the time you do the YouTube TV, the Netflix, and a lot of people end up signing up for everything else anyway, you're paying as much as you would for cable. So
Pluto's free. Roku TV has one. I watch Fail Army while I go to bed.
Fail Army,
You know, I just watch. Or
lighthearted.
what do they call it? Amazing People or something like that. They just do amazing things, which is essentially the reverse of Fail Army. Like you flip a cup and it actually lands versus bonking you in the head.
Probably seen me on there a few times.
No. No. Or Cheddar. I watch Cheddar.
Yep.
Hey Cheddar. How you doing?
Oh, you saying hey to him? That's it. I'm out of stuff.
All right, it wouldn't be right if I didn't leave you with something, a bit of an overnight study that I stay up all night making these things. This one, not so much. Friday study for you. We got FANG, the FANG stocks, but we added Microsoft. So what I did is I looked back, 10-year look back of the 30-day performance going forward. Is that how I should say that?
Say it again.
So we want to know, how does the FANG stocks plus Microsoft perform over the next 30-day window? And so we looked back 10 years to get that data.
There it is.
Perfect.
It's just a lot longer, but we understand what you're talking about now.
Okay, so on the screen there you see FANG plus Microsoft. This is the extended version of FANG. Facebook, Apple, Amazon, Netflix, Google, and then Microsoft. So what we did is we looked back to see 10-year average and median performance of all of those there. The reason why we put Microsoft in the mix is because Microsoft is the largest position in the S&P. So it makes up 6%, so it'd only be right to add them. If you add FANG plus Microsoft, you get a total of 21% of the S&P 500. So you understand, with those moving higher, that's why the markets are moving higher. So we thought if those start to pull back, what's going to happen? So by looking at their average performance there, we just figured we could make a few assumptions. First thing I'll point out is Facebook doesn't actually have the ability for us to go back 10 years worth of data because they went public in 2012. So it's partial data there, that's why they're off to the side. You've got Netflix as the obvious winner over the next 30 days, but it's the smallest weighting out of the S&P. So it's only 0.8% at the moment. So even if Netflix tanked, it wouldn't be enough. As long as the other FANG stocks held up, it wouldn't be enough to really drive the markets lower. So that's what you have there. There's your average performance. Amazon, small gain over the next 30 days. Apple, Microsoft, and of course Netflix does well. Facebook is the weak link there, but again, looking over an 8-year time period. So it's cool.
Nice.
What do you think about that?
That's a good one.
Is it worthwhile?
For Friday, that's a good one. Yeah.
Okay.
That was a good one.
I like it.
The MFA.
Let's go home.
Wanna go home?
I want to open the doors actually and just...
It's a beautiful day here.
Great day.
Beautiful day.
All right, thanks for watching, everybody. Hit the subscribe button or something, all that good stuff I'm supposed to ask you to do, and have a good weekend.